Hello students, I'm Vipul Mittal, and in this video I will discuss which all interests you should not include in the gross income. These interests are exempt from tax. You know that interest is your income and you include interest in your gross income. Nearly every type of interest income is taxable, but certain interests are exempt from tax. So in this video I will discuss which all interests you should not include in your gross income. These are exempt from tax. So interest on state or local bonds, interest on municipal bonds, bonds issued by state government, municipalities, interest on such bonds is exempt from tax. Mortgage revenue bonds. So these are the bonds that are issued by municipalities to finance mortgage. So basically, funds are used by municipalities to give loans to first time home buyers. And these first time home buyers are provided loan at a very low interest rate. If you have bought mortgage revenue bonds and you are getting interest on mortgage revenue bonds, interest is exempt from tax. You do not need to include this in your gross income. Arbitrage bonds. These again are issued by municipalities and funds are invested in other securities. You have qualified private activity bonds. So these are not private activity bonds. These are qualified private activity bonds. So these again are state or local government bonds, but some part of the proceeds are used for private business use. And there are various conditions that make these bonds qualified. So private activity bonds are issued by government, and these bonds actually benefit non-government person, private businesses, charitable organizations, individuals. So proceeds from issuance of private activity bonds are used to finance private businesses or individuals or charitable organizations. But interest on private activity bonds is not exempt. It is taxable. But yes, if it is a qualified private activity bonds, so certain activities are qualified. If the proceeds from these bonds are used for these specific activities, then it is a qualified private activity bond. Now, certain activities are qualified, or you can say certain activities are specified. And if the bonds proceeds are used to finance these activities, then these bonds are qualified private activity bonds. For example, you have airports. If the proceeds are used to finance airports or sewage or greenhouse projects, then these bonds are qualified private activity bonds, and interest on these qualified private activity bonds is exempt from tax. When you're calculating your gross income, do not include interest on state or local bonds. Do not include interest on mortgage revenue bonds, arbitrage bonds, qualified private activity bonds. These are exempt from tax. All right, students, we'll connect again. Goodbye.